Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading platform. So in February, if you have followed the stocks that we have found after analyzing more than 700 stocks or charts every week and invested only 100 shares each, you would have made more than $2,000 last month. Of course, we do see some losses, but we use more than 10 indicators to analyze the chart and make sure that our members minimize their losses and preserve as much gain as possible without taking huge risks. So for more details on stocks that are set up for great trades every day, along with education and chart analysis, indicators, and also want to be part of the weekly Zoom calls with Q&As regarding swing trades and investment, make sure you join our Platinum group and let's successfully invest and make it through this tough market together. So what's new this week, Mark?
So this is the S&P, and you can see this is the beginning of the year right here. We had that nice big, build up through January. Then we got to February, like February 1st or 2nd. And you can see, I just threw a trend line in here. We're still trending down. We popped up a little bit this week. We're still under the 50 here for the most part. You can see that today although the market is down a bit today, we had a nice wick down and then came pushing back up. So we're currently right above the 9 and the 200-day SMA, which we're having, the market's having a good support level for at least the last 4 days on the 200. And so that's encouraging for market bulls. We're still under the 50, but again, you see these lines here, and this is the 3950 line, which was acting as support yesterday, and now it's acting as resistance. So you get on either side of these lines, and you can see how important they are, especially when you're trading, to use these lines to your advantage, buying down here on support and selling up here on resistance, even on a major numbers such as 3,900, 3,950, 4,000. We're still under the 4,000. We're still trending down. We're seeing over here on the MACD is still basically above the signal line, just barely. We have a little bit of a crossover on the stochastic, and we're under the 50 on basically the RSI. So again, although it looks good, we came down, consolidated, bounced up a little. We're still in a downward trend. So I try to look at the markets from afar instead of just day to day, because you can get caught up into, oh, wow, the market really went up today. And how does that affect your swing trading thoughts? Let's go over to a whole different one. So here's the NASDAQ. Now, this one's done well. Okay, we're above the 9. We're above the 20. We're above the 50. They're all ascending, which is good. And then we're above the 200. So we have a little bit of a sideways pattern this week. The market's been really indecisive. You can see by these candlesticks, the trading has open and close has been pretty narrow the last couple of days. And then we have these wicks up and down where there's battles being fought. Are we going up? Are we going down? News comes out, and it just puts a lot of volatility into the markets for us. But again, this is little exposure, the NASDAQ, to financial stocks. And of course, it's the financials that are pulling down the Dow and basically the S&P, where they're more heavily weighted. Also, the treasuries, the yields have come down and borrowing. So investors associate that with cheaper money for tech stocks to go out and borrow if they need to. Whether that's true or not, or they have the money to do that, I don't know. But that's what's out there being talked about. The Dow, you can see, is trending down. Also, we're underneath the 200. We've been under that for a couple of weeks. We're under the 20. You can see we're having trouble getting past not only the 200 but the 20 as acting as a resistance. And today we're trying to just get a little bit above the 9 going down. When you look at the MACD, we're at negative 333 versus negative 351. So it's barely above, but we're quite a ways from the zero line. The stochastic is rolled over negative on the Dow, and then we're trading under 50. So I don't see, other than what's happening in the NASDAQ, much to be bullish about in at least the 3 major markets that we look at. Let's go look at some of the stuff we did this week. So we put gold on the list. It was on the 13th of March. Which would have been right at this level here at 176.66. You can see we traveled up, and then we got out of it at this level here at 181.70. This was the day the Powell was coming out and the FOMC meeting was coming. So part of me said, I'm looking down here, okay, the stochastic crossed over a little bit. And to me, sometimes that's a signal that the MACD is going to, although it didn't. But I would have gotten out at this point, but you can see, again, I left some on the table, but it doesn't bother me to leave it on the table. Those with greater risk aversion than I have could stay in this. And you can see the next level of resistance where stops would be put is about 186. And for the last 2 days, we haven't been able to get up there. In fact, we're down a little bit today on gold. But the trade made about 2.7% in, a short amount of time, 1, 2, 3, 4, 5, 6, 7, 8 days. So I'm happy with that position that I had in at least gold. We also did silver, and this one I just got out yesterday because it was coming right up to a resistance line, which isn't on here at this point. But we got in on this one on the 14th when you see that we had a one candle close above the 9 and above the 200. So we get in at this level here, which was $20. And then we kind of bounced around $20. We never did go back down below the 9, broke through the 50, stayed above the 50 for the last 3 days. You can see that turned into support. It was resistance, turned into support, got up to this level, and we were about two or three, no, it was about $1 away from where I saw a resistance line, described it in the watch list. And so I decided to take our profits because we were up 6.34% over a period of 6-7 days. So that's a good trade. Plus, I knew that we had this other level of resistance up here at 21.57. You can see today we just topped it. So had I stayed in there, I would have put a stop in right about in this area just to catch it, and we would have been out, but it would have given us a little more boost. But I'm happy with this amount of draft. Again, we had a little bit of a yesterday crossover of the stochastic here. And again, I'm being very risk averse, especially in these markets. So when that happens, you can see we're starting to roll over a little on the MACD, but we're not there yet. But unless we can get past this level, we probably will. We got into Lilly. It's been right here on the 13th. So we had some candle close. Yeah, right here probably. But candle close above the 9. This is the level, according to the guidelines, you would get in. And then right about here, you can see that line actually turned into a little bit of a support line. We continued up, and then we went sideways for quite a long time. You can see this downward sloping 50-day simple moving average. We kept coming up, and just we can't get past the 200, and we just keep hitting our head off the 50. And so yesterday we did the same thing, and I just would have put a stop limit there because it's just going sideways again and taking that trade out, which we did. You can see again we had a little bit of a crossover, the stochastic, which gave me a little bit of confirmation that okay, you're okay to get out. You see today we're trading up above the 50. Again, can it maintain that, or where's it going to close, or is it just another fake? But the 50 and the 200 are almost crossing here, which would be a death cross, what they call when a lower number of an SMA crosses the higher level. So we'll see what happens. But we got out of that with over 3% gain in several days. So I'm happy with that position also, especially in these markets that we're in. Again, there were 2 trades. We did one on this day here, where we got out a little bit higher, and then yesterday we got out on the yellow line. So I was trying to split it, see if we can get past this on the next day. It didn't get past it. That's why I put in the other stop and got out. Now this could still go higher. You got another level of resistance just above here at 339, and of course you got a resistance level way up at this level. But with this sideways pattern, there's probably, I don't know which way it will break, but I'm happy with getting out right now, right before the weekend. I think we have 36 positions we've had so far since the beginning of the year, 8, and we have only had 8 losses, which is a 75% win ratio so far. So that's pretty good. And, I attribute it to sticking to our guidelines as much as possible. Now, they don't always work and we get out, but the idea is to get out and not lose on the downside. So if I can lose this one here at 136 down, but I gain 239, 207, 382, then you're going to win the majority of the time. So we can take losses, but we want to limit our losses, and that's why we use stops on the bottom. So if you look at your risk reward ratio, if you buy a stock at 10, your limit may be 9, but you want to gain up to 12. So that's a 2-to-1 risk reward ratio. And if we can stay above a 2-to-1, we're going to do well in swing trading. And so far this year, we're doing pretty well. So the Horizons list, we just started this a couple of weeks ago, and this is something I've always had. I just never, put it out there because I have a lot of stocks on the Horizons list. So every Monday, we try to publish, I'll go through, numbers of stocks. The Horizons list is just a selection of stocks that aren't immediately swing trade candidates, but possess positive traits. Mostly we're seeing a really good beat down on these stocks, okay, and with some potential of trend reversal on these. So we put them on here, and I try to put comments, what's wrong? This one's below the 200 SMA. Exxon, we're waiting for a close above 200. Price actions below the 200. A couple of them graduated to the watch list. AON could have graduated. Thermo Fisher, Eli Lilly, of course, and ASML. But if you look, the day we put these on Monday, here's the price when we listed. Here's today's price. So, the watch list is, at least this week, did pretty well. If you'd taken all the gains and just put $100 in, you'd be up $44 a share on the watch list alone. Now, again, these are riskier stocks. The Horizon list, they graduate, they go into the watch list, which means that they have a majority, if not all, of our guidelines are being met. So here we are, it did pretty well. We've had 2 losers on this one. Last week, it looked the other way around. It was red, but this week it looks pretty good. So I'm going to have to see. I missed a couple of these ASML we could have been in, and I missed that one, which you do. But, some of these like Lilly was good. Thermo Fisher was good. We had some good ones. So utilize this Horizon list. It's not something for the faint of heart, but it's something if you're looking for a potential trade into a position. It doesn't have definitely all of our critical guidelines met, but sometimes if you're more risk adverse, you can see what the gain might be.
Thank you very much for listening, and I hope you enjoyed this episode. For more details and updates regarding swing trades, chart analysis, and stocks to watch each day that are set up for great trades, make sure you join our Platinum group so that we could get through this tough market together. See you all next week.